Hi traders, welcome to the week ahead analysis video with me, John, senior market analyst here at Blueberry Markets. I'm going to take you through some of the data, some headlines this week, as well as some very interesting charts at the moment. So we're going to take a look at all things trading, and yeah, let's get straight to it. So on terms of red folder data this week, not a huge amount of red folder data, but there are some very interesting numbers that we need to keep our eyes on, that including some inflationary data. So if we just take a look at the news calendar for the week ahead, we have some inflation data out of Australia. You can see CPI year-on-year forecast coming a little bit lower at 3.4%. We also have some German prelim CPI month-on-month, which is forecast to come in a little bit lower as well at 0%. Most importantly, I think out of the inflationary front is the Tokyo core CPI year on year. So we actually saw CPI or core CPI in Japan last week rise to 2.7%. Tokyo core CPI, however, is maintaining or supposedly going to be maintained at 2.2% this week on Friday. That's going to be something we need to take into consideration. If we see any kind of significant upswings here, then that Japanese yen strength could continue within the markets. Over on the US front, so obviously I've got a little bit of a note here, and Powell signaled cuts basically on Friday in his speech at Jackson Hole. So the market now very much pricing in the fact that the Federal Reserve are going to be cutting rates in the next meeting in September. So there is a very strong signal from Powell that is going to happen. He didn't say how or how much they were going to cut by, but he said the strength on which they cut will be from the upcoming data. So we're going to take a look at the CB consumer confidence this week. Consumer confidence will definitely be something to watch going into this week. We've also got our prelim GDP quarter on quarter as well. Any kind of downside or negative revisions here on our GDP quarter on quarter is going to be very, very significant in the US. Core PC price index as well, very much a piece of data that the central banks look at, or the Federal Reserve anyway. Any kind of strong downside here as well, then we're going to be talking maybe 50 basis points instead of the 25. That's going to be very bearish for US dollars. And then on Saturday, we've actually got manufacturing PMI coming out of China. So it'll be interesting to see if we see any growth here, or if we're still in a period of contraction in China. But other headlines to note, there's some gold COT reports that I'm going to touch on a little bit later in the video, so stick around for that. I want to show you that there is some extreme buying coming from the hedge funds that I want to take a look at. Silver was up 2.6% on Friday. We've been talking a little bit about the commodity silver in recent live streams and whatnot. Then we could expect some upside. And then the Mexican peso up 2.8% versus the US dollar. Seasonally, the Mexican peso is actually very strong this time of year, but with compounding that with the fact that the US dollar is much weaker, you know, nice little potential carry trade there between the Mexican peso and the US dollar. Going on to the currency strength meter this week, then what have we seen? Well, no surprises here that the US dollar is still that weakest currency, remaining at -7. The weaker currencies also included actually a little bit of the Canadian dollar as well, and we've seen a little bit of downside starting to come into the Swiss franc. Swiss franc typically this time of year as well can be a little bit weaker in the markets. Pound evidently still strong, as well as the New Zealand dollar. We saw a lot of the risk currencies like the pound, like the Australian dollar, like the New Zealand dollar performing quite well last week. So let's go take a look at our US dollar index. So the pivotal point for us last week was this 102.50. We felt that the dollar weakness was going to continue from a fundamental outlook, and that did, and the market drove lower. Had a bit of a sort of say slow trading week. It kicked off quite well, and then it kind of paused within the middle of the week, and then we had the Jackson Hole, and after Powell's comments, we pretty much saw significant downside in the US dollar. We're in the 101s now, or below the 101s at the moment, so it looks like the market's heading down towards the 100. Would I be surprised if we got any kind of sort of pullbacks this week? I think it'd be very dependent on how the US dollar data goes. I think if we see further compounding of contraction within the US economy, then we could see a continuation down towards the 100, which I wouldn't be necessarily surprised by. This would be a very significant low. It was this low that formed back in 2023, so I think this is going to be a very pivotal point in the market, so that wouldn't be surprised if we did see a move here. However, after large moves, we can often see periods of consolidation, and with the market not really experiencing a lot of heavy data this week, it could be one of those weeks where we get that. Moving on to euro US dollar, then the euro dollar heading up towards the 112.50s now. These highs that formed back in July of 2023, would there be an area of resistance there? Probably. You know, we saw a very large swing from here in the past. You know, is this going to be an area where the market finds resistance again, or at least just some relief from the rally? You know, we might just see some short-term profit taking in and around this area. So again, kind of expecting a little bit of more downside in terms of US dollars. If we think about the euro in terms of just like how it's performing generally in terms of data, not that strong across the board, not that strong, but against the US dollar is what's really driving the market higher here. Dollar weakness is definitely the force behind a lot of these moves that we're seeing. That being said, moving on to cable, pound US dollar. So we've seen a significant rise. We've breached above the significant highs that formed back in July of 2023, whereas you know, other markets haven't done that yet. So maybe the pound showing us what's to come for other markets. You know, if it does continue to move higher, will euro US dollar breach that 112.50, for instance? Now I've just put on a fib retracement tool and just had a little look at extension values, just because the market can become overextended at these type of areas, and we are heading up to sort of the golden ratio of 161.8. Not the biggest fan of fibs, but I just thought I'd have a look at them, see where they were coming. For me, 133.85s is a little bit more important. This zone in here where you've had a bit of support before price broke through to the downside there, a lot of volume around that zone, so I would expect the markets to maybe continue its move up to the 133.85s. Now let's talk a little bit about gold then, and what's been happening in the gold market. Why I'm thinking we are starting to approach those areas where we might see a little bit of a top. Is it here yet? I don't think so, but I just want to make you aware of what's going on in terms of the longs. So this is a non-commercials table here. Okay, now this is provided by cotreport.com, so you can see the website just there. This is a free tool that you can have a little look into, but what's interesting about this and what I'm really looking at is, right, so here's the gold commodity, non-commercials long, non-commercial short. Not really too fussed by the change at the moment or the net positions and things like that, but what I am looking at are two columns here. You've got the open interest long and the longs. Okay, now you can see they've color graded this really nicely, so when you see sort of heavy green numbers, right, that means that they're getting to extremes. And if you know anything about me and know anything about commitment to trade reports, extremes I feel are good reversal signals. So we started to get extremes back in the 16th of July, right, and this was the move after the 16th of July in gold prices. The market moved significantly lower from that point. Since then we've continued our way up, and you can see that contracts on the long side were getting shallower, okay, and then they started to pick up again around about the 13th of August, which is around this move in here. And you can see actually now 20th of August was the previous report that we had this week, and they are now buying at levels that we have not seen for at least over a year. So it can go back to the 12th of September here, 2023 at the moment, on this little chart that they've got posted on the website. And you can see 20th of August, 355,000 added into those long, or that's the long contracts. They've added 26,000 longs at that point. Which is substantial. If we take a quick look at the open interest, 66.7% on the open interest, and I'm just having a flick back here, and we haven't seen that for over a year. So starting to get to levels where I feel we might get a little bit toppy on gold, but obviously dollar weakness is going to be a big driver of this, and if we do continue to see dollar weakness, then the all-time high of 25 531, spot 765 could be a target for those long this week. I am going to be very cautious of getting long gold now because of these extremes that we're getting into. I mean, look at net positions as well, heavy green on the chart there. So thanks for watching this video update. I hope you really enjoyed it. If you did, please leave it a thumbs up, subscribe if you are new to the channel, and I'll speak to you soon.